Okay, hello, welcome once again to Sir Dave's tutorial. Today we're looking into a topic called ledger. A ledger is a principal book of accounts that classifies and summarizes business transactions. I'll take that again. It is a principal book of accounts that classifies and summarizes business transactions. It is called a principal book because it is very important and very essential in the preparation of financial statement. Ledger is all basically all you're going to be doing in your accounting. You have to make use of ledgers. So now, having stated that, another thing you need to know also about ledgers is that it applies the double entry principle. If you check my previous video, you will see where I already explained that in details. Okay, it applies the double entry principle. That is, you debit the receiver and you credit the giver. So we'll move forward to the types of ledgers. We have three basic types of ledgers. We have the sales ledgers, we have the purchase ledgers, and we have the general ledgers. The sales ledgers are ledgers that contains transactions relating to the sales of goods by a firm to their customers. So all transactions relating to sales are all recorded in this particular ledger. Then we'll move forward to the next one, which is the purchases ledger. The purchases ledgers are ledgers that contains transactions relating to the purchases of goods by a firm from their suppliers. So take note, sales ledgers, or sales transactions rather, are all recorded in the sales ledgers, and purchases transactions are recorded in the purchases ledgers. Then we now move forward to the next type of ledger, which is the general ledger. The general ledgers are ledgers that are actually subdivided into two. We have the nominal ledger and we have the private ledger. The nominal ledgers are ledgers that contains information relating to income and expenses. Income like commission received, expenses like rent, insurance. Then the private ledger is a confidential ledger, and it contains accounts such as capital accounts and drawings accounts. So having said all of that, I will just go ahead to make illustrations for easy understanding. So let's start with this illustration. March 1st, Mr. John commenced business with 1,000 naira in the bank. Mr. John commenced business with 1,000 naira in the bank. If you check my previous video, I explained how transactions such as this are usually posted. Okay, that is you applying the double entry principle. You get me? So now, looking at this right now, you need to be able to determine which what are the two accounts that are affected in this transaction, and which of those accounts will be credited and which will be debited. So let's look at the question once again. Mr. John commenced business with 1,000 naira in the bank. So that means 1,000 naira itself is a capital. Okay, but now this told us that this money was actually in the bank. So the bank was the one receiving the 1,000 naira, and capital is the one giving it out. So we prepare our ledger. Okay. Okay, so the first one, since we are dealing with two types of accounts here, or two accounts rather, we are dealing with capital and capital and bank. Please don't forget that, capital and bank, because the money was actually in the bank at this particular date. So we start with the capital account. I already said that the capital accounts will be credited because the money was actually in the bank. So if the bank is receiving, the capital account to be given out. So this is the credit side. As you can see, this is the credit side. So we start by putting the date March 1st. You put, now in this particular place, this is a place for particulars. What's particulars? Particulars are details or summary to the account. like you're trying to, it means that you're trying to explain what you are doing in this place here. Now you put the receiving or the corresponding account in this particular place here to show that since capital account is being credited, the corresponding account is here to show that bank account is going to be debited with whatever amounts that we placed here. You get me? So this match first, then we have bank here because bank is receiving. Okay, then our naira sign comes here, 1,000 naira. Please, whenever you're preparing stuffs like this, ensure that you put your debit and your credit. Okay, then ensure you put the sign you are working with, whether it's naira, whether it's dollar, pound, sterling, whatsoever. So this for this, then you can actually balance off the accounts. So March 31st, balance carried down, 1,000 naira, and we are done with that. Okay, because what this actually means that as at the end of this month, what we are working with, or what is in our capital, is actually what 1,000 naira. Okay, so we put the corresponding since we have treated capital, we are going to put the corresponding account in the next ledger. Remember, we are dealing with capital and bank. Okay, so this bank account. Now we said that bank accounts will be what? Debited. Thank you for that. I know you're following. Okay, so bank account is debited with what amount? 1,000 naira. So these are debit side and these are what? Credit side. So we have, remember to put your date. So March 1st. I told you also that you put the corresponding accounts that relates to this. Okay, it just shows what you are doing, because you putting capital here shows that the capital was actually credited with this amount. You get me, back? Or that the money is being received. You can also say that the money that we're debiting here was received from capital. You get me? Okay, so capital, and how much? We have 1,000 naira. So you balance it off. March 31st, balance carried down. We have these, and we have 1,000 naira. So this is this. I said that balance carried down means that as at the end of this month, what we have in our bank account is what? 1,000 naira. So this is just an illustration. It's not really a comprehensive question like that. When you are doing a comprehensive question, there will be a lot of information that may likely be posted into these ledgers. Okay, so we'll take one more example then. Okay, so let's look at the next example. March 2nd, purchase goods 200 naira by cash. Purchase goods 200 naira by cash. Remember what I said? First of all, you have to determine what are the two accounts that are being affected by the reason of this transaction. Okay, so purchase goods by 200 naira cash. Purchases, the two accounts are what? Purchases and cash. Okay, purchases and cash. Now also the next step is to know which accounts will be debited and which accounts will be credited. So let's go back to the question again. Purchase goods 200 naira by cash. So let's explain this. Let's look at this. Well, when you make purchases, okay, and you pay for it, are you receiving the money or you are giving out the money? Okay, are you receiving the money or you are giving out the money? So of course, you know, when you make purchases for something, you are basically giving out cash, okay, or check or whatsoever. But in this question here, it is what's cash. So when you pay for something, money is leaving your hands. So cash account will be credited. Remember, the double entry principle states that what? Debit the receiver, credits the giver. Debit the receiver, credits the giver. credit the giver. Cash is the one giving us right now to make purchases for how much goods? 200 naira worth of goods. Okay, so if cash is making payments for these purchases, is going to be receiving, because at the same way you are giving out money to purchase this good, you are at the same time also receiving the goods. Okay, you are at the same time receiving the goods. I mean, when you buy goods, you just leave it with the seller. You have to get it now. Okay, so that's just the situation. So I believe we have been able to come to the conclusion that purchases will be debited and cash will be credited. Okay, purchases will be debited and cash will be credited. So let's just quickly illustrate that on the board. Okay, so first of all, we can start with the purchases account. You're about to put your debit and your credit. Okay, so purchases account. Purchase account is what, do you remember? Purchase account is what is debited. So we're going to debit it. You're about to put your date, March 2nd, which I told you that in this list here you put the corresponding accounts. Okay, the corresponding account in this transaction is cash account. Put that here. Then we have this, which is 200 naira. You can balance this off, so it's give towards March 31st. I'm using March 31st because that's the date, that's the last date in March. You get? Okay, March 31st. Balance carry down, which is how much? 200. Sorry. March balance carry down, we have this 200. So you can balance this off. Okay, so we can now prepare the next account, which is our cash account. So cash account is giving out. Okay, so we say March 2nd, purchase 200. Balance it off. Sorry, March 31st. No, I'm just giving and trying to illustrate all that I've explained already. Okay, but when a comprehensive question is given, a lot of things may likely be put in this respective account. Get me right? So that'll be all for now. Please remember to subscribe to the channel, remember to like, remember to share, and drop your comment as regards how this has helped you, and if you think we can actually, if you have suggestions as to how we can make improvement to this channel, you can also drop that on the comment section. Thank you so much for following till now. Thank you.